Sassine Ghazi. Sassine, the numbers overall looking good here. And of course, you got Ansys as part of the picture now. Last quarter, a lot of talk about the IP business. So tell me, is that getting any more predictable? And how does that affect not only this quarter, but how you're looking at the coming year?
Hey, John, great to be here. Yes, for Q4 and the FY26 guide, you can look at it as a combination of meet and beat on the top line and bottom line, which is very exciting. As far as Q3, we did hit a bump with some of the China restrictions. We could not sell to China for about 6 weeks, which is half the quarter, and it had an impact on our IP business in particular. But as we look ahead, we're continuing on de-risking China, and we're taking this as part of the guide for FY26.
So how should investors understand that? Because we got some news this week that sounded like relatively good news on China when it comes to chip restrictions. And one might think, oh, well, that could be good for Synopsys. But then again, the wind has a way of changing direction rather quickly these days.
Yeah, so you're referring to the NVIDIA H200, I'm assuming.
Yes.
Yeah, which is very good news. And the reason it's very good news because the more you can build the AI stack on the foundation silicon that is US-based, like the NVIDIA or AMD or whomever, it's good news because it has stickiness to it. Because the more you develop software on the hardware layer that the US provide is good news. From a Synopsys perspective, NVIDIA, of course, as they're designing the H200 or whatever chip they're shipping, it's using Synopsys technology. Now, inside China, the race is on. There are many companies that are developing alternative chips. And if these companies are not under government control or restrictions, we can sell to. But increasingly, these companies, we cannot sell to them. And they're trying to find local alternatives to design these chips.
So what do you do about that? And how long before that becomes a problem and a ceiling to growth? Are there other ways that you can expand into various other markets and blunt the impact? Exactly.
So that's how we're looking at it. For FY25, our business in China was declined, was down about 20+%. So as we're looking at FY26 guide, we're assuming the environment in China is not changing, meaning we're not guiding or taking into account in our forecast an uplift in the market in China. So we're taking a more balanced, pragmatic view. However, the increase in investment in chip design and now with the Ansys portfolio increasingly at the system level across the globe in the US, in South Korea, in Europe, etc., we're seeing a very nice tailwind that is making up for the headwind that we're assuming in our guidance for China.
How much momentum potentially comes out of that Ansys acquisition sooner, given that digital twins, the ability to really model what impact a design will have on operations is now very much in your portfolio. Are you finding that customers around the world are leaning into that kind of investment, or is it going to take more time for that to materialize?
John, I know you and I discuss this topic quite often. If you believe that the future of AI is going to move to the physical world, meaning an intelligent car, robot, drone, and many applications, aerospace, etc., you need a more sophistication in designing these complex products. Therefore, you need more use of the Synopsys Classic, the semiconductor, as well as the Ansys portfolio in order to create a digital twin, to be able to simulate, in order to reduce the cost, improve the time. Most of these markets traditionally have engineered these products through physical prototyping. You know that's expensive, that takes time, it's not intelligent, does not take into account an AI-powered product, more software content. And that's where we see significant opportunity. And that's where the endorsement of NVIDIA a couple of weeks ago is a validation of that direction.